In this video, I'm going to cover long-term investing in stocks with strong dividends. But before we get going, if you could hit that most amazing and wonderful like button. Also, if you have not done so before, please subscribe and turn on those bell notifications so that you never miss a new video. Do you want access to my stock alerts? Then consider checking out my Patreon group. There is a link in the description down below. When asked how he managed to be such a successful investor, Warren Buffett said it was all about putting the odds in his favor. Averaging in and buying up stocks that we believe in over the long run is a strong strategy for the average investor. That's what we are trying to do. It's imperfect, but this is what it's all about. This explanation concisely describes the only rational approach to investing. When you average in, you always win. This is how I invest in dividend stocks over the long term. Have you ever wanted to be a landlord but did not want to deal with tenants or the headaches? That is what is so great about stocks that have had years of increasing their dividend payout. I like to average in over the long term on stocks that are on the dividends champions list. I do this by deciding which stocks that are part of this list are under or overvalued and trading them accordingly. These trades for me happen every Monday. It is super boring strategy, but I have averaged a 20% return per year following these simple principles. Professionals are not any good or even better than you are at near-term forecasting. A distressing number of them enjoy speculating on macroeconomic matters such as foreign exchange rates, commodity prices, and future interest rates. However, numerous studies have shown that short-term forecasts in these areas are no better than would be achieved by chimps throwing darts. Likewise, we are bombarded with predictions of short-term direction of the stock and bond markets. Yet study after study has shown that the timing of near-term market increases and decreases is entirely unpredictable. Think of these pundits not as peers, but as entertainers. Returning to Buffett's advice to calculate probabilities, a good starting point is to avoid wasting time thinking about the type of unpredictable events described above. Eliminate all macroeconomic predictions and all attempts to guess the direction of the markets over the short run. Focus on these factors that can actually put the odds in your favor. There is one area that is completely predictable. You know with certainty that your net investment return is increased if you can reduce your cost of investing. The principal cost of investing for most investors is income tax. Your after-tax return varies inversely with the amount of tax that you pay. To minimize your taxes, begin to recognize that deferring tax for the long run is the best thing to eliminating it. Capital gains tax is payable only if you sell your investment. Reduce the turnover in your stock portfolio by owning only companies with strong balance sheets that operate profitable, growing, and relatively predictable businesses, and plan to hold them for the long run. This style of dividend investing does exactly that. It is so important to not get scared out of your long-term position due to a headline. After tax, your next highest cost of investing management fees and commissions. Most people should only very low fee index funds and hold them for the long run. This approach lowers your taxes and fees and the amount you will pay. Take the S&P 500 ETF that over the last 5 years has averaged over a 10% return. As a landlord, the best you can hope for would be to earn 10% of your property's values each and every year. Moving from the certain to the highly probable, stocks have proven to be one of the best asset classes in which to invest over time. While short-term price movements are unpredictable, returns from investing in strictly traded companies over a period of 5 or more years are likely to be highly satisfactory. Unless you have a short-term horizon, there's a lot to be said for investing in stocks rather than bonds or other asset classes. Also, numerous studies have shown that for stock investors, value investing does work. As the Oracle of Omaha says, it's all about putting the odds in your favor. If you are interested in my long-term portfolio stock list, then check out the Patreon group, as this level is only $10 per month, or you get a discount if you buy an entire year for $100. I wish you all the best in your investment journey.